Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit the ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Greetings everybody. Today guys we will again to speak about the Japanese yen, because currently it shows the clearer setup compared to other currencies. As yesterday's major event has happened, Putin has made its press conference concerning the Crimea referendum and Crimea voting. Well, the major thought that has been announced in this speech, if we will not be focused on the Crimea itself, he said that Russia has no intention to develop any separation in the Ukraine on the other regions, and it stands for unite the single Ukrainian country. Well, and that could give some relief for markets in the nearest future. At least currently, I think that within the nearest couple of sessions, the Federal Reserve meeting will be the major event that all eyes will be put on. So, speaking about technical picture, we have discussed this yesterday and the Japanese yen. Now, today we will start from the daily time frame chart. What is interesting is that, if you remember, previously we had this pattern A, B, C tab. That was fast acceleration right to the 100% extension target. Market has hit significant resistance, and we said, as market has hit overbought right at the agreement resistance, so that's really significant resistance level, we should expect some retracement right back down, but we do not want to see that market will move below the C point, because when the market moves below the C point of any ABCD pattern, it erases this ABCD pattern, and you can see that this return right back down was really too fast to treat it as the just simple retracement. And market has moved right from the overbought to the oversold condition. Now market has hit the oversold right at the weekly fib supports around 101.20 area. Market previously had tested this level, you can see by this low. Now it has returned right back down again. From the price action point of view, market now is forming the consolidation as a reaction probably on this support. That looks like the bullish flag pattern, bearish flag pattern. But by itself, this combination of the hidden oversold right at the fib support could be treated as the stretch pattern from the Jed-Napoli framework, and usually this pattern leads to some retracement to the upside. That will be the major object within the nearest couple of sessions, I suppose. So we know that market stands at the support, although the overall price action stands more bearish rather than bullish. Price trend also has shifted bearish here, and if we wouldn't have this support and oversold, I probably suggest the possibility to take the short position right inside of this flag, because this is really was fast action. Market simultaneously has erased the bullish pattern, and I can't exclude that market really could continue to move slightly lower. But as market stands at the support, to take any short position, we need first to see some reasonable bounce to the upside. From the scalp trade perspective, if we will take a look at the 4-hour time frame chart, we'll see that we could get the double repo buy pattern. Yesterday we have discussed that this could be the bread and butter sell, and market in fact has shown this action to the downside. But take a look that market hasn't quite reached the fib resistance level, major fib resistance of the thrust. That is the necessary condition for the bread and butter. In fact, market has shown retracement that is smaller, less than the 3.8, and that is the situation of the double repo buy. The minimum target of this pattern, so we have the nice thrust down without no closing above the 3x3. This retracement stands also less than 3.8. Well, we have the close above the 3x3, close below, and right now we have the close above. So that is the confirmation bar of the of the double repo buy pattern. The minimum target of this pattern stands at the 50% resistance of the thrust of the double repo. That is the minimum target. That's approximately 102.35, somewhere in this area. Okay. The stop, according to the JPY framework, should be placed below the 618 support of the most recent thrust up of this swing. But the recent, usually, guys, I place stops somewhere below the second bottom, because the fib levels right now, especially the 618, is well-known levels, and market makers very often clear out this level. So I prefer to place, when I trade the double repos, especially on the on the intraday charts, I prefer to place a bit far stops. That could give me more guarantee that they will not be triggered just occasionally or just during the washing of the significant fib levels, especially on the intraday charts. If market will turn to the downside and will take out of the lows of the double repo, at least this low, that could be the sign of the double repo failure, and that probably will be the pattern. That is also the directional pattern. Double repo failure is also the JPY directional pattern, and this will tell us that the flag that has been formed on the daily time frame will start to work, and we should be ready for the downward action to the downside if this double repo will fail right here. If it will work, the target, as I said, minimum target somewhere around 102.35 area. Another pattern how this double repo could be treated from the classical standpoint, so you can see on the hourly time frame chart, that could be the double bottom on the hourly chart. So we see there's some sort of the divergence. It's not quite the divergence, because here we also see higher bottom, but the degree of the bottoms of the MACD is a bit stronger than on the chart. If we will apply the common rules for trading the double bottom, it should be the double distance from the neckline to the upside equal to the length of the depth of the double bottom itself. So we will count to the upside, we will get approximately the area around 102.74, and you could see that this will be an area around weekly pivot resistance 1. So guys, personally, if I would trade this pattern, I probably will be focused more on this target, mostly due to the situation on the daily time frame chart, because market by this action has erased the bullish pattern. That's not just a retracement when the market hits the oversold. That's why I better would choose some closer target. But as market stands at the significant support and oversold, the reaching of the weekly pivot resistance 1 is also possible. So we will act according to the situation. But initially, right now, it's better to be focused only on the first target, approximately 102.35. That just will be safer, and it's more reliable target right now, because some turmoil still stands on the markets. Also, guys, today we will get the starting of the so today we'll get the FOMC announcing of the policy, so that also could give us bring some surprises. That's why it's better to focus on the closest target, because besides the risk-reward ratio is just excellent here. So that's the clear patterns that has been formed on the Japanese yen, and I think that they are interesting. On the other currencies, I do not see really clear setups right now, at least compared to the setup that we see right now on the Japanese yen. So let's see what will happen. But that setup is really interesting and reasonable. It's really not bad compared to the really doom and gloom action that we have got previously within the previous couple of weeks.